Welcome to Tradespoon. My name is Lakar Pal. I'm CEO and founder of Tradespoon, and today we're going to have a live trading, weekly strategy roundtable discussion where we talk about current market conditions, what to expect short-term and long-term, and how to take advantage of your current subscription and any questions you might have. So I encourage you to enter the question. My goal today is to make sure that I get a chance to answer any questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from 1999 through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. Very proud of that experience, shaped my professional career. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistical analysis and artificial intelligence. Disclosures, I'm going to go through several live examples. Very important to look at the disclosures. Trading stock and options involve risk not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal best performance. All right, before we get into a trading system, let's talk about current market conditions. Looking at the spiders, let's look at the spiders. Again, market is in short-term correction. The spiders down 1%, 89, 90, almost 1%. Value stocks are down over 1%. Small cap down 2%, mid cap down 1%. So it looks like a short-term correction, something that we expected for the past probably a couple months, since I would say end of November. But looks like the top is here to stay, right? I think this is a pretty steep correction. We had one in January, first trading day. Now we have second day in middle of January, which is, I think, is in line with the expectation that January usually volatile and market is way overbought. So from my perspective, I think here the 382 at this point would be the top in the market. So as we approach in 382, I would consider raising cash, because I think 382 might here to stay, at least for a couple of weeks, maybe even a couple months, until the market is able to shake out some of the extreme bulls. I think this is a top basin pattern, and 382 is here to stay. In terms of the downside risk, I think 377 is down. Usually I like to wait to at least till the closing bell. We already reached 373, is this right? So we already at 373. So I think at this point, the path of least resistance is to the downside, and 364 is the next level of support. So zooming out into one-day chart, again, we've been talking about this line for a very long time, since November 9th, when the Pfizer announced positive results from the phase 3 test. And I think the market is on its way to retest the 50-day moving average. I personally think, it can, we can have a couple days of overshooting 50-day moving average, right? We haven't done that since probably October, right? September, October has been volatile. We traded below 50-day moving average for a week. So something similar price pattern similar to September and end of October was probably something that I expect to happen in the next few weeks. So worst case scenario, we're back to these trend lines, right? Lower Bollinger Band, back to the trend line from September, October. But more realistically, I think 350, 352 is the worst case scenario, which might or might not happen. We'll just have to wait and see as more data comes in and earnings unfold, right? We had a great earnings from JP Morgan, best quarter ever. Nonetheless, the stock is down 2.5%. So that's a reflection that these stocks are overbought. I would keep an eye on Tesla in terms of how quickly the market will sell off. Tesla is actually neutral, so that's positive. And I would look at the Bitcoin. Let's see, in terms of the magnitude and how quickly the market will sell off. So far, Tesla is still staying at the higher. Bitcoin is down 10%. I would keep an eye on Bitcoins and any other growth stocks that had vertical move to the downs, to the upside. Let's see what else. The main drivers behind rally and the sell-off, Treasury. Treasury is sold off. I don't see a lot of movement in Treasury market. So far it's in the low range. So that's positive for the bulls. It is up 0.5% on the sell-off. VIX, so far staying within the range, and no evidence of any panic so far. And dollar. And US dollar is up. So that's been the pattern for the past couple of weeks. I mean, 8-9 sessions. So looks like dollar is building the bottom. It is oversold. It's back to the 2018 level. Right, so we do have a bottom being built for the past 5 weeks, and looks like a rebound today, this week. So I would keep an eye on 92 and 94 level. As long as the US dollar is rebounding, that will put pressure on the what actually held up the market, which is emerging market. It's down today 1%. Germany down 2.5%. Industrials down 1.5%. And energy down 3%. So those are the main driver of the current market. Nonetheless, I still think this is a buying opportunity. I think buying the market at 50-day moving average, I think, would be a great opportunity. I think the market is going to continue to be volatile throughout the year. So I would expect retest of the 50-day moving average several times this year. I don't think the market will retest 200-day moving average, in the next month, before May. So I would personally be a buyer into this correction and just be patient and wait to see what the support is. Let's see what else is interesting. Obviously, Apple. I would keep an eye on Apple. It's already approaching close to 50-day moving average. That's the support for Apple stock. I'm carefully monitoring Apple. Visa. Steep sell-off below 50-day moving average. Similar to MasterCard, I would keep an eye. It's approaching 200-day moving average, again, oversold. Microsoft, trading below 50-day moving average. I think that's bearish. And let's look at Amazon. And Amazon is trading below 50-day moving average. So still weak. Metals and miners are selling off on stronger dollar. Emerging market is down. Let's see what else is interesting. VIX is up. Industrials are down 1.5%. Again, stronger dollar. Energy down. Gold. Retail sector is pulling back 2%. Semiconductors are down 2%, and the Russell 2000 is down 2%. Transportation sector is down 2%, and banks are down 2%. All right, and spiders looks like rebounding from trying to build the bottom. The last 15 minutes of the session will be important to see. I think now the 377 is a new overhead resistance for short-term traders. So I would consider to go short at 377, 379. So this is the sell zone now. And for model, let's go back to the model. Model predicted 378, 386 as the 378 support, 386 overhead resistance, bullish trend. And with the current sell-off, this is usually, the model is correct, that what used to be support is now becoming an overhead resistance. So I would, if you haven't hedged your portfolio, or if you're still thinking about rebalancing, I think rebalancing near 377, 378 by trimming your long positions and adding to the hedges, I think would be an appropriate entry point. All right, any questions on the market? And again, very important, go through the future rehearsal exercises. This is the something we do in the live trading room environment. I would, most of us, I mean, unless you're a day trader, you know, you're holding position for a few weeks, for a few months, I would go into end of March, end of the earnings season, right prior to the next season, and kind of decide what's going to happen by April, right? Where do you see the market is in April? There are key support that we outline. 364, I would say support number one. Back to the trend line around 350. This is next level of support. Reaching September or October low is the next level of support around 330, right? Let's call it 330, right? 200-day moving average or below. So and then you have overhead resistance is at 384. So those are the different levels. Sorry, give me 1 second. Give me 1 second. Sorry about that. So I think this is the most critical exercise that I find very useful. You don't really have to be correct exactly where the market ends up, but it is important to decide whether by end of March, the market will be in 1, 2, right, in this range, 3, 4, and 5, right? And that's what can help you, at least what helps me to decide how bullish I want to be in my portfolio, how much cash should I have, and how many positions should I have. That's the main decision. In the live trading room, my trading plan consists of 4 parts: the cash, number of positions, what is the maximum loss on a position. Those are the most 2 important rules when you're faced with uncertainty, right? When VIX is rising, uncertainty rises, and this is where we start thinking about how to rebalance the portfolio. So the 2 most important decision is how much cash do you have, and how many position, what is your maximum loss. In terms of how many position and maximum loss should never be determined by the market conditions, right? If you decided in live trading room, if I carry position overnight, my maximum loss is 2.5% of my portfolio. So no matter what the market is doing, my stop loss, I exit the position when I'm losing more than 2.5% of my portfolio per position. And then I go through the exercise of how many positions do I have. On average, I have 10 positions. So my maximum portfolio drawdown is 25%. If you started to trade if you're new to Tradespoon or Yellow Tunnel, or you haven't traded, you haven't lived, you haven't traded when the market is in area 5, right, below 200-day moving average. If you traded when the market was below 200-day moving average, at least 3-4 times, I would say you're probably more experienced trader, right? It doesn't happen very often. It happens maybe, I don't know, a couple times a year. So that means you already traded at least a year, maybe 2 years, or probably, yeah, at least to 2020 and 2019. Then you can have more positions. If you only trade it once when the market dropped below 200-day moving average, I would say you're still learning, right? You're still going through the learning phase. And trading psychology is becoming very important. So when you face with uncertainty, very important to decide on that, make that decision. 2.5% maximum loss, that's in my case. And how many positions? I have 10 positions. So if I'm wrong, right, and let's say I'm going to vote 1, right? I'm going to vote that the market will close at 1. I'll probably make money at 1. I will probably make money. My portfolio will grow if it's 1. My portfolio will grow if it's 2. 3, I will probably be, probably be neutral, right? I'll probably be neutral if the market drops 350, and I'm going to start losing money if it's at 340 and 320, right? So that's how I'm viewing the market. So it's very important to make that decision in terms of how many positions. Sorry, this just came up. So it's very important to make that decision for yourself, and in terms of how many positions you have, and then decide where the market is going to end up. So by April, I'll do it again. So if you just write it down and just make a decision if it's going to be above the current high, if it's going to drop and stay in this range of 364, right? If it's going to drop and stay at the September lows, where was this? 364, 350, right? 350 is 3. Then drop in the range 200-day moving average, 350, 330 is 4. Right, and right below 200-day moving average is 5. So let me know. So what do you guys write? Let's vote. If you think it's 1, write down 1. If you think it's 2, write down 2. If you think 3, 4, and 5, etc. And that should help you decide how to rebalance your portfolio. All right, we have 2s, 3s. All right, nobody says 1, so it's great. So we're getting the bull, and I think this is a good reflection of overall market. I think when we did this last week, almost everybody said 1 or 2. This week, everybody's going to say 2 and 3, and then next week, if the market is going to sell off, more people will say 3, and then some people will say 4. So this is the retail market sentiment. It has been exceedingly bullish going into this week. So now we have to watch the retail sentiment, and it's usually a contrarian indicator. As more and more people are going to get bearish and panic, that's when the market usually reaches some kind of a bottom. I don't think anybody said 1 except me. Okay, good. So that's important. That's important in terms of deciding how much money you wanted to have in cash, and then how many positions. Because if you have 4 or 5 positions, if you're new to Tradespoon, you have 4 or 5 positions, 2.5% maximum loss, you're down 10, 15%, right? Even if the market reaches 4 or 5. And as long as you believe that the market is bull, we're still in a late phase of bull market, which this is my opinion. I think we're, last stage of the 2008 bull market, right? We're now year 11, very long bull market, and we're in the late phase of that, right? This year should be we should be higher, right? The market should be higher than it is now. So then every time market pulls back, these are opportunities, right? And you still want to make sure, always think about, be flexible, that if you see, I would keep looking at the dollar, I would look at the treasury and see if dollar, it's, let's say, right, if dollar all of a sudden breaks through the, let's see, let's go back to 1 week. Let's look at longer term trades. So we're going back to September. 92 is the main overhead resistance, right? So as long as the US dollar is below 92 level, below 94 level, I'm not worried, right? I think that the overall thesis of bull market is intact. If US dollar breaks through the 94 level and all of a sudden goes to 95, 96, then I have to get flexible. That means reflationary trade is not on, and dynamics of the market is changing, and I have to become more bearish, right? I'm not going to say it's 1. I'm going to say it's probably somewhere between 3 and 2. But until then, I have to just watch the market. I have to watch the dollar, right? I have to watch the VIX, and then I would have to watch the treasury market, right? See if there is any panic in the market. So far, I don't see any panic in the market. It's just kind of an orderly correction. All right. So that's the spiders level. Let's see. Any questions? All right, we have one. Good. Facebook. Is it a good time to enter Facebook? I don't like to trade, again, I don't like to trade stocks that are in the news, right, on every day, right? With all the regulations of big company and potentially increase of taxes, I'm not very bullish on Facebook, right? I think long term, I think Facebook is a great company. So if you're thinking about just buying Facebook and hold it for a long term, it has reached 200-day moving average. It's actually turning positive today. So it looks like a good price pattern, right? But I would, unless you want to hold, if it's a short-term trading, I would not trade it. If you planning to hold it till May, I would say then the answer is yes. I would, 200-day moving average will hold. And in terms of investing, since I'm in the marketing business, you don't have many choices outside of Google and Facebook. If you depend on digital marketing, and every single company has certain budget in digital marketing, those are the two main sources of advertising. But short term, there's headwinds, right? There is uncertainty about how much regulation is it going to be, what will be response, see how's Twitter. Yeah, Twitter is continuing to go in lower. Google. So there's uncertainty about taxes, and I think large mega cap companies will gonna get hit the most. And then there is regulation. How much freedom they have to control. Freedom of speech. So that's my view on the Facebook. Okay, one. Thank you. Capitulation bottom. All right. Kevin, you mean seasonal chart? Usually January is extremely volatile, right? And there's a saying, the way January is going to close, that's how the entire year will go. All of this are, I think there's some, science into it. So, I do believe that. But from seasonality point of view, usually January, this is what happens usually, right? Start of the January is pretty bullish, and then towards the end of February and middle of February, it's actually a slight drop in the price. So from seasonality point of view, I think we're just repeating the usual cycles, right? December usually extremely bullish. January, February could be extremely volatile and to the downside bias, and then March and April usually are strong months, right? And going into a May, bullish. I think this price pattern will repeat itself again from seasonality point of view. There is no 100% certainty, but I don't know, 60% chance. You usually look at the seasonality, right? Right now there's no correlation to the underlying market, and model is predicting too high or too lower. So in the next 50 days, the long-term model basically sees that it's neutral, right? We can go higher, we can go lower, and overhead resistance 389, support is at 351. Pretty wide predictions according to our seasonal chart. And I think this is exactly probably what's going to happen in the next 10 days. Worst, I think 351 is worst case. That's what the model sees. I don't think we're gonna reach 350, but we might, right? We'll just have to see how the earnings season will unfold next week. A lot of it will depend on earnings season and distribution of vaccine, right? At some point, as I think the number of hospitalizations actually dropped today. So that's a great news, right? One of the headlines in Wall Street Journal, the number of ICU beds dedicated to COVID-19 patients, the number of people admitted to a hospital is the lowest in January. That's a positive sign. And as more and more people vaccinated, my parents-in-law got vaccinated in Florida. So a lot of people get vaccinated in Florida. A lot of people gonna start get vaccinated, I think, in New York, California, and Illinois, probably in the next, I would imagine, couple weeks. So at some point, that would be extremely bullish for the market, right? When the number of ICU beds is going to dramatically drop and the number of people vaccinated is going to increase, that would be the next leg up in the market, right? So the question is, until then, how much further can the market sell off? So, Ken, thank you for your question. Joseph, I'm bullish Apple, entry point for Apple. I think, again, if I believe one or two, it cannot happen without Apple, right? If Apple is going to be at 200-day moving average, spiders cannot be, at 400, right? This is just a very large component, trillion-dollar company, big part of technology, big part of spiders. So I think entering Apple at 50-day moving average, maybe dollar cost average, I would say around 124, I think is a good entry for Apple. I would not dismiss where it does drop and maybe reaches November lows, 113, right? Just depends on the magnitude of the correction. But maybe half of the position at 124 and half of the position at 113, I think Apple will continue to go higher. But it's going to take time. It's not going to happen. I think short-term technology is under pressure. Nasdaq is down 1%, and I think until middle of February, I think the market is going to continue trading sideways market. In 2018, there were 5% drop in the end of January into early February, then market rebounded. Kevin, 2018 was more of, I think, China, right? There was the, manipulation of currency and issues with China. Right now, I think the main issue is that the market is just overbought. So 5% drop, I think, is reasonable, right? I'm not arguing that 5% drop in market is not reasonable. So from 381, 5% is about 19 points, 20 points, so 360, right? So 5% drop would be 360, 364. That's the 5% drop. I think it's extremely reasonable, and that's what I think can happen. Drop to 350, that's about what, 30 points? That's 7%. I think that's 6%. 6-7%. I think it's also reasonable, right? But less likely, right? So if you draw, you always think about these ranges as the bell-shaped distribution curve, right? I think 380 is here to stay. So the way I'm thinking right now, I would still give some probability that we might get a little bit higher, so maybe 385, right? But less likely. So, I think in terms of distribution, highest probability is around 360, 364, right? That's where the highest, and then it's going to significantly drop, by February, right? Still possible, but it's, I think more realistically, it's going to stay in this range in the next, till end of January or middle of February, right? So this is where the market is going to gravitate towards. So if you're doing butterflies, I would pick 364 strike, right, and 385 maybe, and 340 as your strikes, right? If you're doing butterfly. Okay, thank you for your question. Pablo, in terms of question was where we don't separate performance of different services, right? We don't, at least not as of right now. So we do have two performances. One is we do separate robo-investor. So robo-investor is separate, but everything else is just in live trading performance. And the models have been equally, in terms of probability of success, are equally correct. So live trading room performance consists of active trader, weekly trader, monthly trader, earnings trading. So I would look at live trading room performance as an indication of weekly trade performance. Marvin, I agree. Tesla, you usually look at these vertical moves, right? So like FCX, right? It's a vertical move to the upside. It's down 5%. So you keep an eye on FCX. Tesla is definitely something that's, I'm actually positively surprised that Tesla is only down 1%. So that's great. Well, we'll see what's going to happen during earnings. Yeah, and you look at Bitcoins of the world, because these are the stocks or ETFs that had a vertical move up, and then usually you follow top blow of top pattern, right? We talk about blow of top patterns, right? These are the usually patterns like this, where it goes vertical up and then vertically down, right? So you want to be careful and just watch these stocks, and usually those are the that's the pattern you're looking for, and then the end of the correction is you usually also keep an eye on these stocks, right? If Bitcoin reaches 50-day moving average and start bouncing back, then you know that that's probably getting close to the end of the correction. Thank you, Marvin. Bill, question about gold, silver, and dollar. So I'm bullish gold. I think it's taking a break, mainly because of the steep prices drop in treasuries, right? Steep drives in treasuries. It's dipped below 200-day moving average. It's back into this trend, but I'm still bullish, right? Especially if the treasury price is going to start going higher and the market is going to continue to sell off. Right now it's trading more, I don't know, maybe inflationary hedge, right? But I think gold and silver will continue to go high because of the reflationary trade. And I do treat it as a commodities. It might not treat, it so far hasn't been directly correlated to other commodities like soybeans and corn and energy. But I think it is going higher, right? Especially if the treasury going to start rebounding, right? We had a pretty steep sell-off in treasuries, right? Money moving to equity. People don't need the hedge anymore. They don't need the gold, so it's sold off. And I think if treasury gonna rebound back to the trend line, then you will start seeing silver getting stronger. But I'm still bullish on silver. It's right at the 50-day moving average, but I think it's gonna continue to go higher. Juan, good morning. Question about TSM announced earnings. Strong earnings. It pulled back after the strong earnings. Just like strong earnings in JP Morgan, pulled back. That's usually an indication that the market has reached short-term the top, right? Doesn't matter what earnings are, good or bad, the stocks are not going higher. So that's, to me, an indication that short-term we reached the top, and I would not chase the market at these levels. And I would consider actually rebalancing the portfolio if we do reach 378 level, right? Usually you have this ABC pattern. Short-term market is overbought. I expect, we have Martin Luther King Day, Mondays off, right? So usually, At least I believe in these ABC patterns, right? We reach 374, 372. We'll see where we're going to close. I assume next week we're going to have a quick rebound, right? I don't think it's going to be just a vertical drop. So we'll probably rebound 377, maybe it's 379, right? Right, and then there'll be another leg down. Right, so I think that's what's going to happen in the next, I don't know, 2 to 3 weeks, or some variation of this. So when the market rebounds 377, 378, I think this would be an opportunity to rebalance your portfolio, right? Take advantage of the rebound. I think the stop is here to stay. Risk versus reward does not make sense to go bullish here, right? And then you just rebalance your portfolio and maybe close some of your weak positions and maybe add to some of your bullish positions. Hedges position, sorry. All right. Thank you for the question. Paulo, thank you very much. If for some reason you don't get email, do me a favor, just click on chat now and just put your name, email, and talk to our chat team. We're always available during market hours. So just say, send me the link, or I'm not getting SMS message, whatever the issue is, and they'll help you resolve the issues. We also have, one-on-one consultation. You can always schedule a one-on-one consultation with our product team. And I encourage you, if you've never done this, at least schedule one. It's free, right? We don't charge. A lot of companies charge for actually one-on-one consultation with the products. We believe in education. We want you to master our products. So we do offer you one-on-one free consultation. You should take advantage of that. ETFs, not sure what that question is, ETFs. TJ, ABC, ABCDE, if you believe in Elliott waves, which I do, different technical analysis, there are people that wear different hats. I believe in ABC pattern. I believe in Elliott wave, right? ABCDE, right? Sometimes there is ABC, right? It just depends on the magnitude of the correction, depends on the news, but there's, few scenarios, right? This is A, then you have rebound B, and then you have C, and then it follows with D, and then the E, right? And that's what will decide, will we reach 350 level or not, right? We can have A, B, C and stop, and the rally continues, or we can have A, B, C, D, E, and then stop. So it all depends on what's going to happen in the next couple of weeks as earnings season unfolds. But I don't think it's the most common pattern, but it is a pattern, right? Do I like banks? I don't like, I always trade JP Morgan. From major banks, I like JP Morgan, right? If I have to choose between Citibank, question was between Citibanks and Wells Fargo, I don't buy the cheapest banks. I'm more of a momentum trader, right? If you believe in swing trading, I'd rather buy JP Morgan at a higher valuation than buying, Citigroup, at a lower valuation. You can see Citigroup is down 5%, JP Morgan, down 2.5%. So I think JP Morgan will outperform Citigroup. Some people have different, they're more kind of contrarian trade. If Wells Fargo is down 8%, they want to buy cheapest. Buying cheapest is not usually buying the best, right? So I'm not going to argue about what's wrong and right. I know that there are some people that like to buy Wells Fargo because of the much cheaper valuation. I think it's going to do a much, there's more catch up, right? So if you look at the 1 week chart, Wells Fargo, there's a lot more catch up to do, right? To reach through the, 2020 level, where JP Morgan is already at that level. So there are arguments for both approaches. I'm personally going to stick with JP Morgan because when, I know when the market sells off, I'm comfortable holding JP Morgan for a long period of time. I'm not comfortable holding Wells Fargo for a long period of time. So I'm personally between major banks. I'm personally long JP Morgan, actually, in my personal account. But I do like banks. I think banks are here to stay. They're overbought, obviously, right? You can see JP Morgan has reached all-time high, actually broke through all-time high. Is it all-time high or is it? Let's see, 1 month. Yeah, so it broke through all-time high, and I think because of the reflationary trade, and I think interest rates will continue to go higher, banks are going to continue to go higher. Not a one-way street. You expect these ABC pullbacks, but banks are going to continue to go higher. Are ETFs worth buying? I personally do like to buy ETFs, right? You see, like in commodities, instead of me trying to buy soybeans or corn, I decided, I'm just going to let ETF make the decision, and as long as I think market is going to go higher, I'm long DBC, right? This is the commodity index. Bought at 512, it pulled back, so I have a cover call. Or emerging market, right? I don't really, want to decide whether I want to buy Alibaba or Baidu with all the litigations and government control, but I believe that emerging market, part of the reflation trade, emerging market and China will continue to outperform the market. So I'm buying ETFs. So unless you have like in banks, I would be a buyer, instead of XLF, even though I do own XLF, but I would buy JP Morgan because I have a strong opinion about banks and which banks will outperform. But if you don't have a strong opinion, like an emerging market, which of the companies will outperform, then you buy EEM. If you have a strong, a lot of our users, love Alibaba, right? Alibaba is not here to not go anywhere. It's a great company. Looks like it found finally support around 200. We're talking about April 200. So you buy Alibaba. Great, right? If you have a strong opinion about Alibaba, then you buy Alibaba. If you're not sure how much regulations, where is CEO of Alibaba, what's going to happen to him, then you buy ETF. All right, Kevin, I like your joke. Sounds good. All right. And I like it. It's good. All right. So Kevin continues to make good jokes. I love it. All right. What else? Okay, so that's my view on the market. Let's see where, we have a long weekend. Usually bulls do not like to hold positions into the long weekend. So last 15 minutes would be important. All right, I think it'll set the tone. If this is ABC and we have another leg to the downside, the last 15 minutes, so let's stay with touch 372, 371. It's going to be pretty bearish for the market. If bulls are able to stage a comeback and maybe close at 378, 379, I think that would be a win for the bulls going into the long weekend. So we just have to wait and see what's going to happen. All right. So how do you trade in current market conditions? One thing that this is the time where everybody's uncertainty level rises, VIX rises, right? We don't really know whether it's going to stop at 364 or 350. Some people think it's going to stop at 320. You're going to get people opinion on all spectrums. I encourage you to open up account at Yellow Tunnel. I'm a founder of Yellow Tunnel. It's a sister company of Tradespoon. What's the difference between Yellow Tunnel and Tradespoon? Tradespoon is, was built on the idea of models, right? That the models, the technology, that financial engineers can predict the market and, outperform the market, which is great. But in reality, when VIX is rising, right, and VIX becomes, at 20, 25 models do a good job, right? And I can argue that, Tradespoon model or any other models, I don't care who's building these models, but they're doing good job, when VIX is in the steady range, right? Models doing a good job, some of them better, some of them, worse, but they're doing a good job. If VIX jumps to 32, 35, I don't really care what the model you have. It's not going to make that, it's not going to be able to predict that in the next 3 weeks VIX is going to jump to 35. I mean, you can speculate, but nobody's can give you 100% or even 80% or even 75% accuracy that VIX will be at 35 in the next 2 to 3 weeks. But it might happen. So I believe that trading psychology is much better mechanism to approach uncertainty in the market. So we have a Dr. Maneker who joins us in contribution to blog and content on the website. And Dr. Maneker talks about how to deal with uncertainty. So I encourage you to go through quick navigation. There are 2 places where you can find trading psychology content. Trading Concept is a blog. My favorite blog is Process versus Outcome, right? You want to look at the market trading as a process, not as purely outcome, right? If you're trying to predict whether VIX is going to be at 35 or stay at 25, and you're going to only concentrate on the outcome, right? You're going to put all of your money and buy gold, or all of your money buy VIX or buy Bitcoin. I think that's not the right approach to trading. Concentrating purely on outcome is not the right approach. I believe the better approach would create a trading plan, look at how many positions do you have, and just have systematic approach to trading, right? So I would look at process versus outcomes in the blog right now, and I would look at the trading discipline webinars, and in boom and bust cycle and sustaining high performance, right? I always ask on these webinars, why are we here? Why, we have a lot of people today and watching these webinars. Sometimes we have thousands of people actually watching these webinars. Why is everybody watching these webinars and videos and invest their time? We all want 2 things, right? We want to grow our portfolio, and then we want to build long-term confidence in ourselves as a trader, and managing risk, right? Managing capital preservation, making sure that we don't lose 20%, 40% of our portfolio or 100% of our portfolio. So ending boom and bust cycle and sustaining high performance, I encourage you to review that webinar. It's very important. Understanding your inner market, realizing that very important that often we are, as the market right now sells off, everybody experiencing different feelings, right? Some people are excited because they have a lot of cash and they want to deploy it. Some people are anxious because they, maybe they're overly exposed and they have too much concentration in certain sectors, or they're not following their stop levels. So we all reacting to these external data differently, and one thing that I did realize, my favorite kind of aha moment, right? This is a new aha moment that I just experienced, is that our feelings and emotions are not driven by what happens in the market. They're driven by what we are telling ourselves, right? So you cannot blame that you're upset or anxious because the market is selling off. Not blame, maybe not the right word, but you're not reacting to the market conditions. You're reacting to the story you're telling yourself, and some of that stories are facts, some of it is biases. So understanding your inner market is an extremely important topic. Realizing that there is a such thing as inner market, something that's inside of you, is very important. I encourage you to review that webinar as well. And managing extreme uncertainty. So all of these things are great. I think it's great to fast forward to review them, and even if you have that one aha moment for each of these webinars, I think it will change your perspective on trading. All right, let's take a look. Let's see. So again, trading plan, the most important decisions you can make is 30% of your portfolio is in cash. We talked about number of positions and maximum loss in a position. Portfolio drawdown is very important. Probability of success versus return on capital, very important, right? As long as the VIX is trading in some kind of a range, we do have models that do a good job give you 75% accuracy. Somebody asked about how accurate this model. Over a long period of time, it's 75% of the time the models are correct. When VIX is trading in the range, model is 75% correct. When VIX, if tomorrow or next week VIX is at 40, models are not going to do an accurate job predicting a steep sell-off in the market, right? It takes time, it takes data. VIX doesn't jump from 20 to 40. It does it only once a year, maybe twice a year. So you're gonna get skewed results. Something to always keep in mind. And learning how to manage position entry and exits are very important, right? This long-term focus on trading is extremely important. On yellow tunnel for aggressive power trader. Somebody asked about weekly power trader. Let's talk about weekly power trader or aggressive power trader on Tradespoon. The idea, let's go back to Tradespoon. Weekly trader. Right, so weekly trader, look, holding time 2 to 5 days, and I'm usually looking for 1 to 2% price fluctuation. So if I hold a position for a week, I look for less than 2% price fluctuations. Usually 2% stop loss, 2% or 1%, 2% target gain. So if I have 4 trades, if I'm new to Tradespoon, my suggestion is to only have at any given time 4 positions. At 2.5% stop loss, you're down 10%. 5 positions, you're down 12%. Right? But if you know that over a long period of time, they're 75% accurate, then if you have 3 trades where you made, let's say, 2% and you're up 6%, and 1 trade you're down 2%, every 4 trades you made 4%, right? So if you do 4 trades a week and then you multiply by 12, then you're up, let's say, 50% a year, right? So if you want higher returns, then you trade more often. If you don't like to be pressured and trade every week 4 trades, then you trade less often, you have less return on capital. So it all depends on your portfolio size and what your goals are. But it's very important not to be stuck in the moment, not to be stuck in just what's happening this week, right? And a lot of the positions will be down, and you don't want to be concentrating on the outcomes. You want to concentrate on the process. And the process, 3 to 4 positions at any given time, and rinse and repeat. You never have more than 4 or 5 positions at a time. You close the 4 or 5 position, you open the new. You closed 1 or 2 position, you open the next 2 position. But that's the process, right? You building confidence by concentrating on the process. What do we offer at Tradespoon in terms of the different models? Elite Trading Circle. If you want to know what I trade every day, right, you can go to Elite Trading Circle and actually look at the trader log, and see what did Vlad trade today. Today, I'm actually trying to break the spider's put spread, right? I'm getting more bearish short term. So I'm gonna, when we have a closing bell, I'm planning to close the 370 put and, stay with the 380 put. If you wanna see what I do in the last 7 days, you can click on it and you'll see, I closed TSM position, right? So TSM got filled. I closed Autodesk trade. I trimmed Valero Energy trade. I trimmed MJ trade. I trimmed I closed HOG position. I trimmed EEM position. So you kind of see what I'm doing as what I did today, what I did yesterday. And you get, not only you can see it real time, but you also can get SMS messages every time I trade. That's probably been the most popular request, to have access to my, what I do, every day or last week, and have access into SMS message. So you get real-time alert every time I trade. We also have 2 more portfolios. Robo Investor, I mentioned briefly Robo Investor portfolio. This is the portfolio I have about, what do I have? Right now, 16 positions. Some of them I closed already. So I've used dollar cost average. Most of these positions I only have half a position. So I'm very light actually on my Robo Investor portfolio, ready as the market gives opportunity to re-enter some of these positions. Usually looking for 10% price fluctuation, 10% stop loss, 10% gain. Again, no more than 2.5% loss per position. And this is a newsletter where comes out twice a month, and I have 4 new positions a month. And I don't have to be correct on timing, right? I trade using stocks. So if I have to hold position longer, like JP Morgan, probably the longest position I've held, it's been over a year, right? And I still have half of the position left. Also have a premium portfolio. Premium portfolio is it's a similar approach for new positions a month, right? Not to have more than 4 or 5 positions at any given point, especially with option positions. Options positions, you don't really have time to be. You have to be correct not only on direction of the move, but also on timing of the move. So I got into emerging market, right? But I trade option spreads, right? This is a June 51, 56 call spread that I got in. I bought it at $3, trying to make $2. And you get instructional video. And again, 4 new trades a month, right? And I'm using options. You can also use option spreads if you want to, but this is a premium position. You get SMS alert. You can see all my open positions, all the open orders. And again, this is the premium portfolio. So we have elite portfolio. This is a trading, both long, short-term trading during live trading room twice a day, opening and closing bell. And then you have email and SMS messages every time I trade, either in premium portfolio or robo investor portfolio. One issue that I do encourage you, that sometimes people, try to trade all of these portfolios. If you're an experienced trader and you can have a lot of positions, I guess that's fine. If you're new to Tradespoon, new to trader, try again. The cardinal rule, the number one rule is you're new to Tradespoon, you're new to trading, 4 or 5 positions, 2.5% stop loss. Robo Investor has 16 positions. Premium portfolio has 5 positions. Live trading room has 10 positions. You cannot have 30 positions if you started to trade, right? It's just some people sometimes open up the stick and say, "Hey, Vlad, I'm in 20 positions. Market is selling off. What do I do?" Well, when market is selling off and you overextended, there's very little you can do, right? Except preserving the cash and closing your position. So try to go through these future rehearsal exercises. If I'm wrong and spiders actually end up, at 200-day moving average, right? That's possible. Or even if it's a 350, which I think is also possible, what your portfolio will look like if the market is down 8%, right? You don't want to be a situation where your portfolio is down 40% because you're buying Bitcoin and you're buying marijuana stocks and you're buying Forex and you're buying these high flying, what was the term somebody used last week? My favorite new term is beggars, right? Beggar stocks. Definition of right. So stocks that gives a return that are several times their cost and are called multi-baggers. This is stock that doubles its price called 2 baggers, and 10 times 10 bagger, right? So if you only looking for services that give you these stocks that double, triple, 10 times, this is great. There's nothing wrong with that strategy. Obviously it exists and there are people that, do this, but realize that these stocks there's a reason why they double, triple, quadruple is because of this pattern, right? Just like they go 10 times higher, they go 10 times lower, right? So it's okay to have maybe 5% of your portfolio, maybe 10% of your portfolio into these high volatile, high beta stocks. But if you're 100% portfolio in these stocks, this is where you can, lose 40, 50% of your portfolio, and you want to avoid these situations, right? That should be the number one goal. All right, any questions so far? Marvin, thank you very much. Ian, thank you. Microsoft, all right. Alex, thank you. W10 Berger, high risk. All right. All right, guys, you've been great. Thank you for support and your attention. Always love. We have a lot of people today. That makes me very happy. Have a great long weekend. Monday is closed. Enjoy your time with the friends and family. Go skiing, read a nice book, recharge, and hopefully to see everybody in a live trading room environment either on Tuesday morning or closing bell. Today, closing bell at 2 p.m. Central, 3 p.m. Eastern. Alex, Andrei, Arman, Arthur, Avi, Bill, Bob, Brandon, Carlos, Carl, Charles, Clark, Dale, Ed, Eng, George, Ian, Janet, Joseph, Juan, Keith, Kevin, Linda, Marvin, Mary, Michael, Mintha, sorry if I mispronounced, Patrick, Paolo, Rajesh, Rebecca, Ricardo, Robert, Sam, Stephen, Terry, TJ, Tom, Tony. Lots of traders. If you're a trader, do me a favor, update your profile. It Tradespoon and re-register, so at least I can see your first name. W, Virus, Vida, and everybody else. Have a long weekend. Enjoy it with your friends and family, and I will see you soon. Thanks a lot.